Good morning and thanks for tuning into the Trade Setup. I'm Neeraj Shah and let's take stock of the global news flow. First up, Joe Biden has pledged air defense amidst Vladimir Putin's threats and the attacks that Vladimir Putin has done. In fact, the global websites are filled with articles of how the allies of Ukraine are not able to ship the defense supplies on time, and that's an issue. Oil has edged lower though, as slowdown concerns have eaten into the OPEC-driven gains. JP Morgan CEO Jamie Dimon expects US recession in 6 to 9 months. And US has imposed sweeping regulations limiting the sale of chips to Chinese customers, the semiconductors that is. So there's an all-out proper conflict as well as economic conflict underway between a couple of powers in the east and couple of powers and some powers in the west. So that will have an impact on how, or may have an impact on how sentiment is. Sentiment isn't exactly the most bullish, though you would have to admit that while the Nasdaq dipped about 1% yesterday, the Dow and the S&P closed slightly off their lows, though still 0.75% lower for the S&P. The Nasdaq, with this 1% loss, is now 33% quietly in the red. That's quite something. The other cues haven't really gotten altered too much. The dollar index at 113.2, just about what it was, I think, yesterday. The 10-year yield, though, is now nudging 4%. Back again. CBOE VIX 32.33 inches, slightly higher. So I think the changes happen in the 10-year yield, which continues to move higher. Remember, the US inflation data comes out on Thursday, and the Fed minutes come out tomorrow. The one of the 5 Fed governors to speak this week has made rather not so hawkish statements on inflation. But let's see, we'll wait. I think the markets will wait for the Fed minutes as well as the inflation data before anything. So until then, expect it to be quiet. The SGX Nifty too, I think, is fairly quiet today, marginally in the red, if you will, but quiet as she goes. So expect that kind of start. So I think, to my mind, the global template, and let's move on the trade setup. The global template is a sell on rise, and I think any rise likely to get sold into this week. Remember, this week, like I said, Wednesday Fed minutes, Thursday inflation data, Friday evening you have 4 major banks coming out with results in the US, and therefore it's a packed week, and any rise will get sold into. The Nifty PCR, though, yesterday I was telling you about how it's even Stevens. The PCR, the put call ratio, is now jumped up to 1.05. The highest put open interest is at about 17,000. That's the strike, which is the maximum OI, and therefore the make or break level, likely the major support / resistance, as the case may be. Infosys buyback and the TCS results will ensure IT sees some positivity likely despite the recent sluggishness. And base metal stocks could be interesting because base metals are higher in China today. They may impact some of the Indian stocks, so do watch out for that. The other interesting piece that stood out for me was how the trend into mutual funds or equity mutual funds has now been 19 months on a trot. That's quite something. We've seen consistent inflow on the SIP route from equity investors in India. Today, we'll have results from Delta Corp and GM Brewery, so relatively quiet. Tomorrow is big, HCL Tech and Wipro. Then 13th is Infosys. Then we have Avenue Supermarts and HDFC Bank. So packed results calendar this week. Stocks to watch today. Infosys first up. The area was active too. We'll consider proposal for buyback of shares with Q2 results on Thursday. So watch out for this one. We'll likely have a bump up start. TCS, actually thought it will have a good start, but mixed views of brokerages. So revenues are up 5% at 55,309 crores versus the Bloomberg estimate of 54,881 crores. EBIT margin at 24%. The Bloomberg estimate was 23.8. Net profit is up 10% at 10,431 crores. The Bloomberg estimate was 10,293. So it has had a good quarter, by the way, and it has beaten estimates as well. Just that maybe brokerage is expected a bit more because everybody's saying that, hey, we didn't see too much of positive commentary on demand. Now, here, I mean, again, mixed bag. I personally think TCS might have a decent start, but I may be completely wrong here. This is what MK is saying. MK has a hold with a target price of 3,100. because they're saying all positives are captured in the current valuation. According to them, it delivered an inline operating performance in Q2. You could largely agree 20 basis points don't make too much of a change. The demand environment does stay strong, and it's broad-based across verticals and markets as per the TCS commentary as well. The deal closure activity and deal pipeline build up has been healthy so far. I think where the concern comes in is because TCS itself is watchful. I think this comment was very important because um, the management highlighted that winter will be critical for Europe, and TCS would watch how the season unfolds amidst the ongoing gas energy crisis in the region. I think all eyes are out for what happens in Europe in this winter, and that will have a bearing on a bunch of exporters, not just IT exporters, chemical exporters, which supply in large portions to Europe. So that will be in focus. A bunch of other commodities. Textiles will be in focus as well. This season is gone for textiles per se, so you don't expect them to bump any inches in winter. Nobody would import textiles from India, I reckon. But yeah, this winter is crucial for IT services as well as for other exports out of Europe. By the way, IT will be a sector in focus today, maybe the sector of the day. And the trading pattern has been interesting. Mindtree, TCS, and LTI had led gains on Monday. TCS has actually seen an OI buildup of over 5% in the last 5 days already. If it were to open gap up, be mindful of that there's been a bit of a long buildup in price activity in the last few days. Wipro, where the results are coming out on the 12th, has witnessed the highest OI buildup from the sector in this series, 16% OI buildup with price increase of 4.4%. Is there something that that we don't know about as yet, but select people anticipate? Remains to be seen. Wipro results come out tomorrow. We'll watch out for that. JTL Infra, Q2 numbers. I don't track the stock too much really, but the numbers seemed okay, so I'm bringing them out here. Margins expanded 300 basis points. Net profit up 57%. So clearly they put all the right foot forward. Maybe the stock reacts. If it does, you know why. India Cements has divested its entire shareholding in Springway Mining Private Limited to JSW Cement for a total consideration of 476 crores. There is another divestment conversation that is spoken about. So do watch out for that. There is I have missed out on a stock in news. Panacea Biotech. It's bagged 1,043 crore order. So I think that will be really important. So do watch out for Panacea Biotech. Then some brokerage notes. Motilal Oswal has a note on APL Apollo with a buy and a target price of 1330. They say they value the stock at 34 times September 24 EPS. They sense the overall demand scenario to be better, with channel restocking happening in anticipation of a stable or marginally higher steel price. This is a big thing, by the way. If this is happening, then it will probably augur well for some of the steel companies too. Overall margins are expected to get a boost with commissioning of the Raipur plant by third quarter. So one is demand scenario, top line, overall margins, because of Raipur plant may actually boost further. They project a revenue, EBITDA, PAT CAGR of 11, 24, and 32% over FY 22 to 24. Now, the thing that I would want to watch out for the most in APL Apollo is what's happening to the working capital cycle. They had a working capital cycle 1 year ago of 7 days. It's just remarkable that a company in the manufacturing space has a 7-day working capital cycle. It'd be really lovely to see where is it standing currently and what's the management optimism like. So I'll watch out for the con call transcript of this company as it comes out with its results. Then a couple of other brokerage notes. Jefferies on delivery, the buy rating. They say that November 22 lock-in is being seen as a buying opportunity. Essentially, when the lock-in opens up, the stock may come off a little bit because a lot of people will come in to sell, which Jefferies is saying could be a buying opportunity. The stock is being viewed as the best play on logistics given its B2C and B2B exposure. And the recovery on spot on should help the company turn EBITDA positive in FY25, according to Jefferies. Some of it is investor feedback that they had when they visited investor roadshows or met investors in the US. So this is the view that Jefferies has projected today. They have come out with a note talking about all of this, talking about India, talking about specific stocks. I'm getting you a couple of notes from there. One of them is on delivery, the other one is on Siemens. Jefferies saying that investors are discussing Siemens despite the high valuations given the strong 40% plus YOY order flow growth in the last 6 to 12 months. The power T&D exposure and a way to play renewable energy growth in India, apart from automation, is also a reason for the interest. Jeffries believes that T&D should surprise as order flow picks up. So do watch out for uh, these two stocks. Now, the query is about whether Russian war still impacts Indian market. Well, I reckon if Russian war has an impact on energy prices, then that certainly has an impact on Indian markets. I think the biggest bugbear currently is crude and oil and gas, essentially. And if oil and gas stay higher, and oil in particular, even gas, by the way, now becomes a sizable commodity. But if oil prices stay higher, and if oil prices go to inch higher, imagine if China opens up and if oil prices go to inch higher, that will certainly have an impact on imported inflation, because currency is anyways weak and you have a higher crude price, so that impacts Indian CAD, current account deficit, and who knows, that may prompt the Reserve Bank to become a bit more hawkish as well. You never know. So that is one. There is so yes, Russian war does impact Indian markets, though India is faring a bit better than what everybody else is doing. And the only caveat is that the last few days that I've spoken to economists and market experts, everybody is saying that they are not as gung ho about Indian growth in the second half. And if that were to come off, then that is an added pressure. There is a query about whether the decoupling story will continue. Well, yeah, I think India has been decoupled thus far, but like I said, if the currency weakness is out there pronounced, and if crude prices stay elevated, and if China opens up and that leads to further crude price hikes, then uh, the currency, the CAD, as well as valuations, everything comes into question. So India may still fare better than others, but who knows? I mean, uh, the max. Okay, let me put it this way before we wrap up. The max downside that I've heard thus far from almost everybody is about a 10% downside. A couple of notes suggested that the lows of July, which is 15,350, will be held. The point is we are at 17,000. If we were to go down all the way to 15,500, that is a steep correction. So you have to bear that in mind. Just that. But people are not unduly bearish. People might, just before we wrap up, I must say, conversations uh, with Devina Mehra and Vikas Khimani that happened on Twitter Spaces that day was a fairly comprehensive one, so you might want to hear that out. We had a nice conversation with Dhananjay Sinha yesterday of systematics. He puts micro and macro into perspective, so that was good. Um, and a bunch of Alpha Moguls conversations will help you. There's one coming up with Kenneth Andrade this Thursday, and that is something that would work as well. So maybe decoupled thus far. Let's see what the future holds. By the way, what the future holds is important as we wrap up. And in order to try and decipher what the future holds in uh, select sectors, there's the Future Today Summit. Before we wrap up, I must tell you, a lot of you have asked me about how to register for this. Well, it's a subscriber only and limited seats event. So I don't know whether the seats have been filled already or no. But here's my request: that if you're not a subscriber, you can become a subscriber of BQ Prime, and you get entry. Do register, and if the seats are still available, and if you registered in time, then then I would love to see you at the summit. This is happening in Mumbai at the Four Seasons. So do log into the website, do log in to our Twitter handles, and you will see the registration details on any of these posts. Register if you are a subscriber. If you're not a subscriber, become a subscriber and then register, and would love to see you at the event. Nevertheless, thanks so much for tuning in today. Have a safe day ahead, and have a great week ahead.